Here's your complete guide on how to buy a business step by step. Okay, I'm going to show you how to buy a business if you are someone who can easily qualify for a loan, and how to buy a business without money or credit. But first, let's talk about why you should consider buying an existing business in the first place. So once you have made the decision that you would like to become an entrepreneur and business owner, then you have basically 3 ways to get started. You could either A, start a brand new business from scratch, B, buy an existing business, or C, join a franchise. And of course, there are pros and cons of each option. For example, when you start a business from scratch, you have complete control and influence on what that business eventually develops into, because you're able to hire the team, hire the managers, and overall influence the culture surrounding it, which is a major pro. However, this process is very difficult because, you literally have to build out everything. Like, you have to figure out how to get a great website and drive traffic to it. You have to figure out the best location and how to design it. You may have to figure out the best products or services to offer at the most attractive price points. You may also have to figure out how to serve those clients and customers so they're left happy and satisfied, and much more. So the truth is, if you have no experience as an entrepreneur, then figuring out these things for the first time can drive you crazy and even cause your business to fail. And so even if you are an experienced entrepreneur, then you probably know from your experience that it can take 2 to 3 years before you even reach a point where your business is profitable and has long-term sustainability. But on the flip side, you can buy a business that already has these assets and processes in place. So basically, you're buying back time from an entrepreneur that already did the hard work. Plus, you can acquire a company that has already achieved some level of success, which I would define as a business that has consistent positive cash flow, a business that is profitable the day you buy it. Hey Sean, look, I can buy a business that cash flows. Okay, so if that sounds good to you, then let's talk about the step-by-step process for buying an existing business. But really quick, if you're new to my channel, let me briefly introduce myself. Hey there, I'm Sean, self-made millionaire and entrepreneur, and I'm on a mission to help people start, fund, and grow their business. If you're enjoying this video, please do me a favor and click the like button. Also, I'm planning on buying a business and documenting it for my YouTube audience, so make sure you are subscribed as well. It really does help me out. And if you do, tell me in the comment section below so that I can personally reply to thank you. All right, let's get started with step number 1, find a business to buy. So if you've never bought a business before and you have no idea where to start, let me give you 3 to 4 fundamentals to look out for. Okay, so first, as we mentioned, I would suggest number 1, you look for a business with monthly positive cash flow, because unless you are super rich, you are likely going to have to take out a business loan in order to acquire the company that you want, which means you're going to have to make monthly loan payments for that business. And a smart way to service this debt or these monthly loan payments is to use the existing cash flow from the business that you buy. Just like when you buy a rental property, right? Like, you use the cash flow from the property, from the tenants, to make the mortgage payments. Same thing applies here. Now, there are some exceptions to this, such as if you're buying a business purely for their assets, like their real estate or their technology, and you can use that for another purpose, then the cash flow may not be as important for you. But for most new entrepreneurs who are buying their first business, it definitely is. Okay, number 2, look for a company with a diverse customer base. So this piggybacks off of the last point, because you don't want to buy a business and then 6 months later the cash flow stops or goes negative simply because a big customer left. In general, you want to be very cautious about buying a business where any one client or any one customer makes up more than 20% of the company's revenue. And that applies even if the business has long-term contracts with clients, because, while business contracts are important, they don't guarantee payment. And so if someone disagrees with your service that you're providing and stops paying you, you'll have to take them to court. And look, court battles can be long and difficult, but guess what? The monthly loan payments for your small business loan that you use to acquire the business definitely won't stop. So buying a business where 1 or 2 clients make up more than 20% of the revenue is still a huge risk, even with long-term contracts. Okay, number 3, look for a company that is not relationship heavy. What does that mean? Well, think about it. If you buy a business and most of the customers only go to that business because of the relationship with the owner, then that's a problem. For example, most accountants are very close with their clients, and their clients trust their accountant because the relationship they develop over many, many years. So if that accountant left, then that client may be a little bit more apprehensive about working with someone totally new that they don't know. And most accountants know this, and that's why I think most of them decide to just close down their firm instead of selling it, even though I personally think that's still a bad idea. And number 4, look to buy a business with a positive growth trajectory, because if the company you are acquiring is starting to decline, like it's making less and less revenues and profits every month, then that's a signal that something could be wrong and that company could be headed toward negative cash flow. Hey Sean, look, I just bought a business. Hey, where'd it go? No, that's not always the case. For example, the business could have some seasonality, which makes sense why sometimes the numbers decline or fluctuate a lot. Or as another example, maybe the business had some really good press and which caused the revenue to spike up before it started to eventually normalize. Or maybe even the business just had a hard time or was forced to close down during the whole 2020 pandemic and it struggled to get back to those peak years. That's why in either case, it's very important not only to look at the financials on a month-to-month basis, but also give the existing owner an opportunity to explain the numbers as to why they may fluctuate a lot or decline. And from there, it's up to you to decide, okay, whether or not their explanation makes sense enough to proceed, because either way, buying a business that is declining still elevates your risk, as opposed to buying a business that is showing clear, strong growth momentum. Okay, so once you digest those 4 things, then you can move on to step number 2 and start to think about what type of business to buy. Because there are literally thousands of different businesses you could buy. And so if you start searching for companies before you know exactly what you're looking for, then you're going to quickly become overwhelmed and indecisive. And so to prevent that, I have 3 things to help you decide what type of business is best for you. Now, the big principle for all of this is that you want to buy a company in an industry that you know in or understand, because the last thing you want to do is be in a position where you are managing the business systems or leading employees or talking to customers about things that you have no clue about. That's why number 1 is to buy a business that complements your existing business. So if you're like me, you already have a company with existing employees and systems and marketing. So what you can do is start using your existing resources and experience to help accelerate any new business that you acquire. So not only are you buying a company that already cash flows, but you can accelerate those cash flows as well. And some smart people structure this in a way where they have a holding company that sits at the top, and then underneath that holding company, they have subsidiary companies, all with their own management and operating systems that feed up into a bigger business that complements everything. And with this kind of structure, you can really start to dominate your industry and start diversifying your revenue streams. For example, I have an accounting firm, and one of the things that I could do is buy an existing software company that processes tax returns. So now, instead of me paying for software, I could buy a company that is already profitable and could help accelerate it by using all of my clients. For example, if you love hair products or you obsess over going to hair salons and barbershops, then maybe buying a business in the hair industry will be a good fit for you because you naturally understand it. Now, you may have a lot of different interests, but I would really suggest that you focus on where you're spending the most of your time. Other types of companies you may easily understand are ones with very simple business models. This may be stuff like vending machines or cleaning services or residential rental properties or car washes or laundromats and so on. Because for the most part, anyone can understand and run these type of companies without needing an extreme amount of experience or specific skills. Now, I have an entire video where I break down business ideas with very high success rates, so I'll link to that video down in the description below or somewhere at the end so you can watch that right after you finish this one. Now, here's a very important note, which is, okay, regardless of what type of business you buy, remember, it should be something that you enjoy, like something you are passionate about or at the very least interested in. Otherwise, you'll find yourself owning a business that you hate, which in turn will lead to underperforming business. Okay, now that you have an idea on what type of business you want, let's move on to step number 3 and talk about where to find these businesses for sale. There's an old saying that goes, everything is up for sale if the price is right. So more than likely, whatever industry, niche, or business you want to get into, there's likely going to be a company available to buy. In fact, 41% of US businesses are owned by baby boomers who are going to be retiring very, very soon. I'm already seeing that myself in many different business listings. So let's go ahead and talk about where to find some of these businesses for sale. So option number 1 is to use an online directory. Now, there are a few websites that list businesses that are for sale. In most cases, you can see the type of business, the description of the business, how much the owner wants to sell the business for, and an estimate of how much profits the company makes. BizBuySell.com, I believe, is the biggest online directory for buying and selling businesses, so definitely check that out. Another great directory is called LoopNet.com. I use them to find my commercial office space, and I really like their interface because it kind of reminds me of Zillow. And another great online business directory that I pay a lot of attention to these days is called Flippa.com. They list all types of companies, but they focus more specifically on online businesses like e-commerce stores, blogs, and affiliate websites. And sometimes these websites get hundreds of thousands of hits. So if you have an existing business, instead of paying for Facebook ads or starting your own blog, you can literally buy one and replace whatever ads are on the website with your company's ads. Okay, another way to find businesses for sale is number 2, contact a local business broker. These are professionals that help you find, negotiate, and close a business transaction. An experienced broker may have some deals that are off market that can't be found in online directories since they're well plugged into the different communities. Some people recommend that you always use a business broker to handle any business transaction, and I partially agree, but this comes at a cost because business brokers want usually 10% commission for their services, which can be very pricey depending on the size of the business transaction. Okay, option number 3 is to reach out to existing businesses in your desired industry. And I think you'd be surprised to know how many owners are actually considering selling. I mean, it's no secret that entrepreneurs experience all kinds of things that may trigger them to want to get out, like burnout or new business ideas or new passions that emerge or partnership problems, health issues, old age, retirement, and so on. But instead of selling, these business owners just continue to deal with the stress and try to figure out how to overcome it and don't really understand that selling is an option. I mean, even I have a business that I probably would consider selling, but I never actually listed it or engaged a business broker because I wasn't sure if anyone would buy it for what I think it's worth. Hey Sean, I'll buy your business for $1 billion. Okay, sold. Okay, so if you see a company that you would seriously want to buy, then reach out and see if it's for sale. Now let's move on to option number 4, networking. Now, I won't elaborate on this too much because it's obvious, right? Like, if you know what type of business you want, then make sure you tell your social circles and you go to events where these type of business owners are hanging out and so on, and see who wants to sell their companies. Also, business attorneys in particular are great to talk to because they are purview to transactions that fail to close. Okay, let's move on to the next part of this video with step number 4, negotiate a purchase price. Now, you definitely will run into sellers who overvalue their companies. So if you don't try to value the business yourself, then you can end up overpaying. So you can either A, value the company yourself, where you request to look at the company's revenues, their profits, and their EBITDA. And typically the seller will ask you to sign a confidentiality agreement. And then once you have those financials, you could search a great online calculator that gives you some estimates on what that business may be worth. Or you could use option B and hire a professional to do a professional business valuation. However, this option is very expensive because most professionals will charge $5,000 or more just to value a company for you. But if you're working with a business broker, then usually that's something they handle for you. Also, regardless of the company, you need to budget up front how much money you're willing to spend to acquire a business, and I'll talk about financing in the next step. Now, once you have a price in mind and the seller has a price in mind, then the negotiations begin because, okay, just because they listed a specific price doesn't mean they want to sell for that price. In fact, in most cases, the business owner is more desperate to sell than you are to buy. This isn't like real estate where you need a place to live. Like, hopefully you don't need to buy a business to survive. Plus, there are a lot of ways to make the numbers work for both of you. For example, you could request to just buy the assets of the business, or request for seller's financing where basically they help you buy the business using the business profits. Or you can request to expand the payment terms and so on, which is a good place to say, I'll make a video on how to negotiate deals, so make sure you are subscribed to my channel. But if you have any questions about this now, please don't hesitate to ask them down in the comment section below. Okay, now let's move on to step number 5, secure financing. So in this step, you want to actually figure out how you're going to pay for the business you want to buy. Now, there are many ways to get financing, and I have a lot of videos on this channel, which I'll link somewhere down in the description below, that you can check out if you want to learn each one in more detail. But I want to talk to you about 2 popular methods. Number 1, get a small business loan. This is a great option for people with good credit and some extra cash, because in general, you should expect to pay at least 10 to 20% as a down payment on a business loan. For example, if you buy a company worth $100,000, then you should expect to put down $10,000 to $20,000 on any loan that you get. So then, of course, you need to make sure you have at least enough cash on the sidelines to make a down payment. From there, it's time to start applying for business loans. Now, popular loan options are traditional commercial bank loans and SBA loans, both SA SBA loans and micro SBA loans, or even rollover business startup loans for those who have a 401k. So approach these different lenders and make it known that you're looking to buy a business and get pre-approved for a loan. And then from there, you can see if you qualify, how much you can get approved for, and then get an estimate of your interest rates and what your monthly payments will be. So that's number 1. Option number 2 is seller financing. Yes, some sellers will actually help you buy the business they are selling. I know, it sounds too good to be true, but it absolutely is. Because, okay, imagine that Bob owned a furniture store for 20 years and he's approaching retirement age. He's had the business on the market for 9 months with no interested buyers. Now, Bob already found an amazing place in Florida to retire, and he needs to unload his business management responsibilities as soon as possible. So Bob is a great example of a motivated seller who is ready to get creative and make a deal happen. For example, he may be willing to contribute to your down payment for a loan or extend the payment terms, allowing you to pay off the sales price over time, or even keep some equity in the business to decrease the sale price, or do an earnout where in order to get the remaining 30% of the sale price, the business must hit specific revenue targets and so on. And these type of negotiations are how some buyers end up buying a business without money. All right, let's move on to step number 6 and submit a letter of intent, also known as an LOI. This part is easy, okay? This is simply where you submit an official offer to the seller. It should state that you intend on buying the business and exactly for what price. From there, the seller will review the offer and sign off on it. And once that happens, then congratulations, you officially have a business under contract. Because in most cases, there will be a clause in the LOI that gives you exclusive rights to buy the business for at least 90 days. That way you don't have to worry about someone else coming in and interfering with your business acquisition. Now, you should know that LOIs are typically non-binding agreements, but it just shows that all parties are very serious about the transaction. Now, if you need to create a letter of intent, then the site that I highly recommend is using Law Depot. Okay, they have some really great free templates that walk you through step by step everything you should include in your letter of intent. I'll link down to my affiliate link in the description below so that you can check out that free template if you need to. Okay, let's move on to step number 7, complete due diligence. This is the part where things get real, because now you get a behind the scenes look into the business that you're actually acquiring. In fact, 50% of all buy-sell transactions fall apart during the due diligence process. Even deals on a popular show called Shark Tank often get verbal deals done, but then they fall apart during the due diligence period. So as the buyer, it's important for us to really take our time and understand exactly what we're buying by doing things like reviewing the last 3 years business tax returns, getting access to all financial statements, including the income statement and balance sheets, especially the balance sheet, so you know the debt obligations. You can also start interviewing employees about the business operations and their background, making sure that all the equipment and tools work as expected. Look at existing contracts like client agreements, vendor agreements, lease agreements, and so on. Studying marketing campaigns and understanding the acquisition funnels of getting new customers, and much, much more. And so basically the seller should be letting you in on everything about the business, although the seller can still withhold proprietary information or sensitive personal information as well. However, if the seller isn't telling you something that should be obvious or something sounds a little bit fishy, then it's best to confirm than to assume. And so once again, that's why I spent so much time telling you to buy a business that you already understand or you have experience in, so you know the right questions to ask. After due diligence, then you're almost done. You can move on to step number 8, where you close the deal. This is where you call the lender where you got pre-approved from, tell them that you're ready to finalize the transaction, and then the lender will work on getting you the money for the deal. While at the same time, you'll work with a closing attorney that will draft a final purchase agreement. And then once everything is ready, typically the funds will sit in escrow, meaning that the bank or the firm will hold the money on the supposed closing day. From there, on the closing day, the buyer and seller and attorney will all sit down, sign the documents, and then boom, congratulations, you've officially bought a business. Now, don't celebrate too much, because here's another very important note. As soon as the business transaction is finalized, it's important to go ahead and apply for any new business licenses, permits, or contracts that need to be in your name. Also, make sure all existing accounts, especially bank accounts, are now under your primary name. All right, so that's my massive explanation on how to buy a business step by step. If you made it this far, I'm rooting for you and thanks for watching. Please don't forget to like and subscribe and comment. Coming up next, I have 2 more videos that you may enjoy as well, so check those out if you haven't already, and I'll see you over there.